Are you invested in the stock market and are you feeling that your mutual funds are not performing good, especially your SIPs? Well, that's no more an issue because SEBI has introduced up a new asset class, which is your SIF. That's going to bridge the gap between your mutual funds, the SIPs, as well as your PMS, the portfolio management service. We all know the SIPs start for something as low as 100 rupees and the PMS go for over 50 lakhs and above. So to bridge the gap between these both industries, SEBI has formulated up a new asset class, which is your SIF, which are your specialized investment funds. So in this video, we're going to see more details about that and how to get started with that. Hey everyone, if this is the first time you're watching this channel, my name is Anand. I've been posting technical contents on this channel, MacWin, along with some financial insights too. And if it's the first time you're watching this, a subscribe to this channel would be most likely welcomed. Without further delay, let's get started with the video. So what are specialized investment funds? So the SIPs are a new investment vehicle that bridges the gap between mutual funds as well as your PMS. So they require a minimum investment of at least 10 lakhs and they provide the investors with an access to advanced investment strategies. There are a lot of investment strategies which are going to be deployed by fund managers. So these fund managers will have the privilege or they have the option to include their exposure in equities, because we all know that SIPs are only into equities or it's in debt funds. Here they will have access to equities, debt funds, REITs, your real estate investment trust, as well as INVI REITs, which is your infrastructure REITs, into that. And besides that, there go options into derivatives markets too, your F&O markets. So depending on the strategy employed, the Ascent Fund, the AMC, which is going to offer your AMC, they'll be able to do a regular checkup on that and they'll be able to change their allocations accordingly. So why is an SIF necessary? Because this bridges the gap between your conservative investors, because all those salary class of people, they normally try to invest on your month beginning or the month end stuff. Once the salary hits their account, there's an SIP which gets automatically debited from this account. But there are so-called investors who are much lower than the PMS. They are people who are like not having over lakhs and lakhs of rupees, but they are bit on an upper hand than the monthly salary people. So this is especially for those, because this comes handy for them where they'll be able to add a huge chunk of money. But unlike your portfolio management service where you have around 20 lakhs in your hand or like 25 lakhs in your hand and you want to get invested into this. So this is where an SIF come into place, because the PMS normally caters only to HNIs for 50 lakhs and above. The SIFs is only for people who are above the SIP categories. So this has been sought by a lot of people who are into regular mutual fund investments and who want something better than that. So just like your SIPs, the SIFs is also structured to the similar mutual funds and they are managed by your SEBI. And to protect the investors' guidelines, SEBI has put some restrictions on this. A maximum of 10% investment can be done only onto a specific company. That's the first thing they have put. And only 20% of investment of the funds can be into debt securities. It could be your GSEC or it could be a treasury bill or all of these kind of things. Those are all having exemption from the restrictions. Besides that, fund manager should be also certified by your NASM. So those are the main things, and the minimum investment that is required is going to be like 10 lakhs to start with. That's the minimum least entry fee or the allocation that you will be able to do in that. And you have the investment to go into different asset classes, as I said earlier, equities, debts, REITs, InvITs and F&Os as well. And earlier it was more like where companies will be able to buy a stock and then like wait for it to appreciate and then exit. That's how a fund manager or the AMCs used to work. Now they also have the privilege to do short selling. That's one of the main crucial thing, because when you find that the company is going to be on a declining phase, you'll be able to short sell the company and you'll be able to make up that additional profit. That's one of the key advantage of having an SIF. So in what ways does SIF differ from your SIPs? Because we have a higher allocation on any specific companies or in niche in the market, because SIPs gives you an allocation of 15% on any specific company, because in your SIPs you can't have more than 10% of allocation into any specific company. Here the bandwidth has been increased to 15% and you can invest across different asset classes, and you will be able to also go across short selling. When you see there is a potential decline in any specific stock, you'll be able to reap that benefits too. And it is only for people who are like highly risk taking. It's specially made for them, and it is mostly focused for people who are above the SAP category and below the HNA category. So this is specifically for them. The next question that comes to your mind is the SIF safe for you, or is it something specially designed for you? So if you are an informed investor and if you know what exactly you're doing and where you're investing your money and you are able to calculate the risk involved in all of these, then there's definitely a channel for you. I am definitely waiting for this eagerly. I'm especially looking out for one from your Tata AMC, because Tatas are known to have a very good reputation on this. And if there is one that's going to come from Motilal, I'm definitely invested on their channel too, because if you have noticed the recent results of Motilal's mid-cap fund, they have allocation of over 50% on top 5 equities alone. So that's the way how they are trying to break the market. So if there is one coming from Motilal, I'm definitely going to invest on them. I'm going to see where they're going to invest the huge chunk of their money into this, because we've given a privilege of 15% allocation into this. And especially I'm waiting for these two AMCs to see how they're going to perform. And this is a new thing which is developing in the market. We all are like bound to see what are the new restrictions that are going to be in place and set up by SEBI, and how these SIFs are going to perform, if it is going to be welcomed by all the sector of people in the Indian stock market. And this is all about SIFs, what we have in the market as of now. And if there are any new developments on this, I'll give an update on this video. And if you like this video, do let me know in the comments below. And do subscribe to this channel too, and click that like button too. And do let me know in the comments if you are going to invest on these SIFs too. I would love to see what you guys come up with. Thanks for watching.